Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
You know what time it is. It's time for me to give you just one thing that you can do, and then I'm going to tell you about the episode before we get to the actual episode. So this week, the best thing that you can do is to leave us a 5-star review wherever you listen to podcasts, whether that be Apple Podcasts, Google, Spotify, anywhere that you listen to the podcast. It would really help us if you leave us a 5-star review. We got out of the box super hot, and then we've been stuck in the 80s on reviews, and we'd really like to pump that up with real, true, honest reviews. I would appreciate it. This week, this is a great show. If you want to think that you're busy and you can't get into real estate, you can, but you should listen to this episode. My guest this week is Lindsey Duguet. She is an ER doctor. She also is the mother of 3, and she has figured out a way to really start to go crazy in real estate. You're going to find that she's done the research and she's very well vetted in the space really quickly. This is going to be a great show, and it's going to help you take action. Let's go. This is episode 98 of Zen and the Art of Real Estate Investing with my guests, Lindsey Duguet. We were just talking, and I knew I was going to get the name right, so I feel good about that. Lindsey.
Off to a good start.
Yeah. Besides being an investor, Lindsey is an emergency medical and trauma physician. Somehow she got into real estate investing, which we'll get to. Her and her husband, Michael, are the founders of Clover Key Capital, and Lindsey is focused on broker relations, deal finding, capital raising, and investor relations. And she's also a mom of 3, so she's getting it all done. Lindsey, welcome to the show.
Thank you for having me. Happy to be here.
Yeah, no, it's a pleasure. So you actually have gotten a lot done in a small amount of time in real estate.
We have.
What was it that led you to start reading the books? And then we'll go backward and then forward.
Yeah, this came at a point in time where I was transitioning between going from a medical physician in training and residency to having my first attending job. And there's a pretty big pay gap increase in that time period. And we didn't want to be house poor. We didn't want to blow the money and still live paycheck to paycheck, which some physicians do. So we wanted to figure out how to invest this money for not only ourselves, but we were childless at that time. So how do we start investing for potential future generations? And Michael read Rich Dad, Poor Dad, which is the gateway book for a lot of people. And the rest is history after 4.5 years. Yeah,
it's funny though. I've talked to other physicians. A lot of people think doctors like, oh my God, they're all just crushing it. But what about doctor loans for you, for other people? Like there's so much. This thought of, wait, I'm going to need something else, maybe isn't something that people thought of, but they should, because you can still maintain your job, what you do, but also create these supplementary forms of income to do together to, provide for your kids and for yourselves later.
Yeah, when we started this, when I came out of residency, I was $230,000 in medical student debt, which is not a small chunk of money. I mean, that's a good mortgage for most people. Right. So we really were in the negative when we started, and we started putting loans on houses, and it took a long time for this snowball effect to start getting going, where we're finally in the positive, and it's really just been uphill in a good way since that time.
Yeah. So when Michael got Rich Dad, Poor Dad and then brought it to you, were you immediately on board? Is this something, had you ever thought of real estate before, like when you were younger?
I had not thought of real estate before whatsoever. Neither of my parents went to college. Nobody in my family to that point had gone to college. One cousin was an LPN. That was really it.
Yeah.
I wasn't surrounded by investors. My mom, God love her, she still has almost nothing in her retirement account. I mean, investment was not part of my education growing up. Even in residency, the physicians, everyone's very stock heavy. So yeah, real estate was not something that I was accustomed to, knew anything about. So we started reading these books on our own and joining some other groups.
Yeah. Do you think that in general, physicians are what you said, like a little bit, or at least in residency, more stock heavy? Because that's just kind of like set it and forget it. Either have somebody managing, but you don't have to do a lot. I think people look at real estate, and we both know now, like it is a lot to do, but you can set up systems along the way. Right when you read the book, did something go off where you were like, wait, actually, this seems like something we really could do together?
It was an absolute huge light bulb. I'm like, why isn't everyone doing this? I'm like, this seems like magic. This is like too good to be true. And yeah, I mean, it takes a lot of work. None of this, people joke about, real estate investing, it's passive income.
Yeah.
Like, unless you're just an LP position,
exactly.
limited partner, there's a lot of work that goes into this every day too. But
yeah. I mean, anybody with a multifamily property can just tell you, in short, there's nothing passive about it. No matter how detached you are from the management, it's still not passive. You're never going to make that
We
passive.
just had Thanksgiving a couple days ago, and we had just closed on a 17 unit. It's been almost 3 weeks now. But the morning of Thanksgiving Day, we got a phone call that one of the pipes had burst in the basement. So you're like the first to hear about this. And so Michael, my husband, went there, hired emergency plumbers, charged an arm and a leg. They're like, oh, we don't have the part. Everything's closed. My husband rooted around in our garage, which is essentially a mini Home Depot at this point with all the stuff that we have for other properties. He's like, we have the part. So he went, fixed it himself, and came home just in time for the turkey.
But I mean, it's only 5 years ago, really, right? Yeah. 5 years ago that you started to get into it. How did you, what was the journey like for you? Because it seems, I guess, in some ways fast. Probably for you, it's like, no, it feels like a long time and short at the same time. But how did you scale up so you already know these things so quickly in those 5 years? What were the things that kind of helped you guys go?
It's almost like the quote people have with kids. It's like the days are long, but the years are short. And that's essentially what it feels like with our 3 kids. We have a 6-year-old, a 5-year-old, and our youngest turns 2 tomorrow. So the days can definitely feel long with that as well as with real estate investing. But when we look back, it's like, how did we start this 4.5 years ago? And now we have over 500 units and with partners, and we're doing so many other things, speaking on podcasts, holding meetups. I mean, it sounds almost unbelievable when I look at the timeline and what we've accomplished in that period, but it's definitely taking a lot of effort, but it is doable when you have the right mindset and you focus on what's important and put in the key action steps that, you're not seeing the fruits of the labor immediately, but it's these action steps day over day that compound over time. And now we're seeing all these results.
Yeah. Was there a time like when you guys were getting started where you were like, maybe this isn't going to work? Or did you just have the mindset we're going to make this book work and it's going to go?
Yeah. The very first property we bought, when we walked in, there were squatters and urine bottles all over. We both looked at each other. We're like, yeah, we're insane. What are we doing here? We may have, in hindsight, it's 2020. I'm glad we didn't quit, but it's almost crazy that we didn't quit when we first walked into that and seen that property. But yeah, we both had the mindset where we're like, we're in this. We are solution finders. So we decided we're going to keep going. We're going to make this work. We have. Doesn't mean it was easy, but we have.
Where was the first property?
So it was in a D-class neighborhood, and it's called Shenandoah, Pennsylvania. It's really kind of old coal mining town. There's drugs. It's a lower kind of class of living. But what we have done with all the properties to date, we like to find the bad property on the street in that town. A lot of the properties are bad on the street, but we make the product very nice. So we put a lot of time and energy into making a good product, for the customers, which are the renters. So that even in these areas, we have a very, very high demand because we have the nicest house on that block. So.
Yeah. And I mean, I think in a lot of ways, if you're doing that and still being cognizant of what the, overall rent is, you can help that neighborhood lift up, not in the way that people think of gentrification, kicking the people out. You're trying to keep the people in, make a more durable product. You don't have to put in granite and all this stuff.
Right.
So how did you know what to do though with that first one? Where did you start a books podcast and just throwing stuff up in the air and hoping for the best?
Yeah, I feel like it was a lot of that. We didn't know what we didn't know. We had no idea what we were doing. It was a lot of YouTube videos on Michael's part, a lot of trial and error, contractors stealing money when we paid them up front without a contract. I mean,
we've all done that a million times.
Yeah, I mean, it's just, hopefully not a million. We learned from that one, but
collectively.
Collectively, yes. Yeah. So maybe it's a rite of passage we unfortunately had to do. But that's why you should be with mentors and have other people that you're speaking to learn these lessons. So luckily, we took those first couple of properties as We bought them for next to nothing. I mean, we had got them off market at a local meetup from somebody who was sick of those properties, which we didn't know the whole story at the time, but we bought them from him for $2,500 each. And we bought two of them. So 2 houses, 2 row homes for $5,000 total. So we're like, okay, if we lose the money, it's not nothing, but it's not like we're spending $500,000 on some single family in California or something. So we had a lot of mistakes along the way, but we didn't break the bank. And at the end of the day, we did a full burr. We pulled all of our money out, and then we, have kept snowballing since then. And every single project we do, everything we buy, there's new learning experiences we have. There's things that become uncovered after closing date. But you have to have the mental mindset and the grit to keep going and be solution oriented and not just, everything woe is me, everything happens to me that's bad and throw in the towel.
Yeah, I mean, I think it's important for people to know, Pennsylvania is not a cheap state when it comes to real estate. So if you found 2 properties for $2,500 each, it's possible. It might be in a D neighborhood, but part of that is figuring out hey, well, what's the biggest mistake I can make? You're going to figure it out along the way. But I think you said
we made them all in those first properties. So
yeah. But I mean, a good $2,500 to start. Better to, and obviously you're going to have some rehab costs there, but better to make mistakes on that, like you said, than somebody who's brand new investor goes in, buys $1 million, flip, thinking they're going to make it $2 million, and they don't realize how much everything costs.
Yeah.
Did you feel I guess that's a smart decision really for everybody, is to know that, hey, we have to be able to lose this money because we really don't know what we're doing. Is that something that you guys talked about and just knew we're going to keep trying? And then eventually, it did turn out that you could turn it into something nice.
We kept trying. And, unfortunately, some of the contractor issues, like I said, they took the money and ran away. One guy still has a warrant out for his arrest, to my knowledge. I haven't gone to court for that yet. But, I mean, Michael spent a lot of his time learning how to rehab these properties himself, too. So, it became a blessing in disguise. He has this huge skill set now about rehabs that I never thought he would have. He never thought he would have, when he first moved to the United States 13 years ago. But I mean, it's been great. He's used that skill set on so many properties going forward. And it's really nice that he knows when we do talk to contractors and we're doing walkthroughs, like on the 17 unit we just bought, or we're under contract for an 8 unit right now. He sees things and he knows the cost and how much time is going to go into it now, because he was forced into that growing, situation at the beginning.
Yeah, that's really important, because I feel like as you go through properties, like you said, not only identification, but cost verification is so important. Because if you're brand new and somebody just tells you, oh, look, that's no big deal, structural, that's going to be $5,000. Then you bring in structural engineer, it's, $30,000.
Yes.
Your investment's not going so well. So that can definitely help along the ways. So where did you go? Was the first one, those were 2 single families that were right near each other or next to each other?
They were a few streets away in the same town. Yeah.
Yeah. So that helped with management, though, in the beginning. At least you had 2.
Yeah. And before the contractors took our money and ran away, we bought a duplex in that same town. So the first month we were there, essentially, we bought 4 units, and we had those units all the way up until just this past March. We sold them kind of to 3 separate buyers because it was a duplex and the 2 single families. We ended up all selling them this was kind of the stars aligned. We sold all of them the same day. We did a 1031 exchange. So everything ended up being okay, but it was a stressful month selling them to make sure all the pieces came together in the puzzle. But they were some of our best cash flowing assets because they were the nice houses in a bad area. So the demand was high. I mean, we cash flowed very well on them.
Yeah. I mean, I think you have to just be ready for D plus properties, knowing cash flow is going to be great. Management's probably going to be a little bit higher. And one thing that you mentioned that I don't think we've ever talked about is that contractors in general are tough to deal with. But when you're hiring contractors on D or D plus properties, they don't really want to go there for the most part. So that becomes an issue. And can you get a good contractor to come in to an area that maybe they don't want to? We have that trouble. Like we've talked before, I'm in Jersey, but we do a lot in Jersey City, and parking's really tough there. So to do renovations in a city is tough. There's no place to park. They're going to get tickets. So a lot of people are just I'm not going to do it. So did it help you, though, to have those first 4 units all near each other, just from a management and proximity standpoint for you guys?
It did, yeah. I mean, our primary house was about an hour from there. So my husband, Michael, had been self-managing all of those the whole time we actually owned them. So we saved some management costs. We had interviewed some third-party property managers, but they I mean, very similar to the contractor. They didn't want to be going there to show these properties. They were saying, okay, yeah, we'll do it for like 17% a month. We're like, yeah, we're not going to pay you guys that. Like, no, like, well, this is part of the learning experience. So yeah, he learned about Shenandoah very intimately while we owned those properties for a couple of years.
Yeah, I think an hour is really a good distance because it's something that even if you're like overly obsessing, you can't really just go there.
Yeah.
It's a little bit too far to just go there.
Yeah.
So you really need a good reason to go. But it's close enough where if things happen, like you can get there and get back.
Yeah, that's kind of when we're boots on the ground for properties, that's pretty much our radius distance. I mean, we have a lot of properties out of state that we have other partners that are boots on the ground, but for the ones that we self-manage locally, an hour is really our max radius that we like to have.
Yeah. Let's talk about how you got into masterminds and those things, because I think like from reading through, that's really been a good part of your journey and what has helped you guys kind of like go from, hey, we don't know anything to learning, while you're doing it to then going, okay, now we're going to go up the next level to where you are now. So how did you pick out masterminds and find the people and find the meetups that really helped you find deals and find partners and find, colleagues in the business?
Yeah. So when we got to 22 units locally ourselves, that's really where we reached the ceiling, where Michael was spending a lot of his time managing it, dealing with the tenants. I was still working full time at the hospital, picking up moonlighting shifts to fund all these poor neighborhood properties that I would hand off to my husband after we bought them. And then he was, dealt with fixing them up and everything. We were scaling, but not to the level we wanted to be. And I mean, thank goodness I had my husband and he had myself that we could, lift each other up in those bad moments when we didn't have the grit to keep going forward and we were encountering problems, but we wanted to be around other people and people specifically that were above us and ahead of us in the game. There's that quote, you are the sum of the 5 people that you surround yourself with or spend the most time with. So we started to take that quote more seriously and we started looking at different masterminds. There are tons out there. There are a lot of free ones. There are some that are pretty cheap, more expensive ones. There's the whole gamut. I'm in some that are just for physicians. Then the one that we paid for and we kind of interviewed for, this one was more about doing deals and being with other family-oriented people that have the same values and mindset as yourself and to actually form partnerships. And that's what we wanted. We wanted to do more deals while learning from other people ahead of us in the game. And this was the perfect mastermind for us. There are other ones that are, just focused towards wholesaling or flips. So you need to think about what is your why, what is your reason and your goals and mindset, and then kind of find that group that fits you and your needs.
Yeah. I mean, I think it's hard to be on an island as an investor just thinking that you can do it yourself, because we can all tell you like you can't do it yourself.
Yeah. It's a selfish mindset. And that's what we had the first couple of years too. We wanted to have everything ourselves instead of, leveraging other people's time and knowledge and, having a smaller piece of the pie, but not having all the stress and constraint and time management and everything on yourself. So it's part of the growing process for us.
Yeah. But I mean, really important that you found that, because I think in the beginning there's still a lot of people, even seasoned investors, who kind of look at the investing landscape as a competitive landscape.
Yes.
And to me, it's like not at all. It should be collaborative because there's just property everywhere. Like America is very dense. Philadelphia, Pennsylvania as a whole definitely has rural areas, but it's pretty dense as a state.
Yeah.
So there's like a lot of houses. There's just not a lot available right now. You guys actually started doing off-market mailing of your own at some point. How did you get into that? And then what were your targets for those properties and what did you acquire? Because I think that's where everyone kind of decides, like, am I going to do this myself? How am I going to get it done? How am I going to find properties if there's nothing on the market?
Yeah, we've gotten a mix of properties. We've only ever bought one on the MLS ever. Everything else has either been through broker relations, doing our direct mail campaign, word of mouth. So it's really, networking and those relationships are so key in this business. And you can find deals on the MLS, but they have already been picked through more than likely from other people or, the pocket listings, they weren't taken. So now they're on the MLS. So yeah, definitely relations is something that you should be focusing on. But specifically for the direct mail campaigns, we learned about it initially in one of the very first small paid 3-day seminars that we went to. And then it's in other books that you'll read about real estate investing. So we use Property Finder online, finderonline.com. And that's how we filtered out the initial direct mail campaigns, who we wanted to kind of target and go from there. The very first direct mail campaigns that we did, we focused on people who owned their property. And these are all filters on the website that you can use. They owned it for at least 20 years. They owned it in their own name, so not an LLC. They had at least 75% to 100% equity, so little to no mortgage on the property. And we were looking for multifamily properties. You can do vacant land. One person I know, they do just vacant land. Then they cut down the trees, they sell the trees, they lumber it and they timber it. And then they, they end up flipping the land. So there's so many ways you can, skin the cat, so they say. But that's what we specifically did. That's how we got one of our 4 units off market. We got a 10 unit off market that we ended up pulling 275% of our money out of, which is just amazing. We still own it, still cash flow is great. The 8 unit that we're under contract for, we just went to the bank. We got the financing approved for that today. That was also off market. So a lot of these properties are off market. So there's a lot of upfront time and energy that goes into these, because I would say when we started this a couple of years ago, we had a little bit more of a response rate. It is more competitive now because more people know about this and more people are doing it. But, if you send out 200 letters, maybe we'd have 10 to 15 responses in this market, and maybe you close one if you're lucky. If you get 3 under contract, you end up closing 1. So it's definitely not an overnight success. It's not 100% success by any means, but all you need is 1. You just need 1.
And I mean, a lot of times when you're showing up, we're up against wholesalers. Some of them have money, some of them don't. So they're, using the quote tricks of the trade, against us who regularly want to buy. But so, I mean, you guys are focused on tired mom and pop multifamily owners. That's what it sounds like from the list build.
When we do our list builds ourselves, and we still do like 1 to 2 direct mail campaigns a year. A lot of this now is focused on partners and JV type of deals. But when we're sending out those, that's what we're targeting.
Yeah. And for us in the Northeast, I always say like the winter's like the time where the tired landlords really start to raise their hand because the heat goes out, like you said, burst pipe, they just give up, all you need is a big snowstorm.
That guy sold it just in time.
Right. You got it at the wrong time. But I think that's important, to know your geography and locality about like when are people going to be the most motivated. Absentee owners are going to be motivated when they're farther away and the property's in worse shape. So,
things go into a little bit of a freeze in the winter. The rates are still high. People are realizing, okay, maybe because up until now, the sellers, we've been negotiating back and forth so many times and their price point is still up here. Even though the rates have now come up here, there hasn't been so much of a give on the seller side to come back down to the prices that are actually going to work in this market, in these market conditions. So we're starting to see that change a little bit in a good way, because we're not going to buy something that the numbers don't work. Anybody can make the numbers look okay on a spreadsheet, but you're just fooling yourself, right? So
yeah, but that goes back to what you said about, your husband learning everything and kind of knowing the costs. And obviously now you having all this experience at knowing it, because I do think you can make a spreadsheet work. You can go on Bigger Pockets, put the numbers in, and then you can say, well, I want to make it work. So you just switch a number and then it works. But that doesn't mean that it works.
And we see people, we are presented deals all the time, whether it's from a GP syndication side for capital raising or a JV deal. And once we start looking at the numbers, it's like, you're missing this. This is off by a couple percent. You didn't even factor in property management costs. So you can make it look okay, but you need to do your own due diligence when people are presenting you these deals to dig
almost
through
always
and make sure it's true.
Yeah, they always have the property management left out. And then they say, oh, well, I self-manage. And so look how well you've done at that. Not going well for you.
Yeah.
Hey, it's Jonathan, just taking a brief break from this episode to talk to you about Royal Legal Solutions. I had Scott Royal Smith on episode 92 of the podcast. You can go back and check that one out after you finish this episode. And he opened my eyes to how much protection I was losing every year that I didn't activate, build a team, and protect my assets. You can get information about Royal Legal Solutions by using my link at bit.ly/ZenRoyal. And bit.ly is bit.ly/ZenRoyal. You'll find a lot there. You'll find a 30-minute video to watch with Scott. And I can guarantee you what you hear on the podcast is exactly what you're going to hear in that video. So give it a try. I'm down the rabbit hole right with you. Let's get back to the show. Did you guys come up with a plan for the assets that you wanted? You decided at some point that multifamily was a better option for you. So how did you start targeting those, and why did you go multifamily? Is it just for the scale, and then long term, obviously, you got into partnerships and JVs like we talked about?
There's a good book. It's a black and red book. I'm pretty sure it's called Investing in Commercial and Small Multifamily Properties. I think it's by Brian Murray. Quote me on that. I'm pretty sure. But one of the great things that I learned in that book is it takes the same amount of energy to underwrite a single family as it does like a 10 unit. You're just plugging in different numbers. So, but the 10 unit has 10 units that you can, leverage out with the renders and everything. So that was a mind-opening book and kind of concept to me. And that's when we're like, we need to focus more on multifamily. We don't want to keep, and a lot of the single families that we have somewhere around the lake that we have close to us, it's a lot of landscaping and other costs that go into it. And it's just one roof versus if you get 10 plus units under the one specific roof, the CapEx in general can go down. I say that because it depends on the HVAC and everything. So it's easier to underwrite, and there's more of a chance to leverage on those bigger properties, as well as anything 1 to 4 units, as you know, is based on comms. 5+ units, it's based on the NOI. So you have control of how you want to push the rents. Where can you find the value adds? And you can almost make the number for that property when you go to refinance it with the bank then, which is, you can literally print money when you do it right.
Yeah. And I think that's what makes it attractive to investors who keep going to go 5 units and up. Mm-hmm. Totally different valuation, not based on the neighborhood comps. Yep. Nobody else can bring down your value. Mm-hmm. And then the more that you do on the value add, the more you slowly increase your rent, which slowly increases your potential, on refinance to do better. And then, like you said, if you're clustering like you were, and you have a couple in the area, doing well on one can then help that other property that's 2 blocks away scale up as well.
Exactly. Plus, you know the market better. You know what the rents are going for. The more units that you have in that area. So we've found it to be a win-win overall. Yeah.
But when did you guys start getting interested in out of state?
When we joined the mastermind and we realized this is actually something that you can do. I had read the book Long Distance Investing by David Green, and it's a great book.
Great book.
But until you actually get over that, and it was a limiting belief of mine, it's like, okay, well, because we were still in the mindset of having to do everything yourself. So we were still thinking, well, I still have to find the broker. I still have to find the property manager. I still have to do all this myself, instead of having these JV deals with people that are boots on the ground in other states and have these vertically integrated property management companies already with properties they already have in those areas. So it was a completely limiting belief on myself and Michael's mindset. So once we joined the mastermind and we were like, oh, people do this every day. Like, this is something we can do. And we started talking to other people and, networking and forming these relationships. That's when it took the turn to the JVs and the syndication deals for us.
Yeah, that's important too, though, because I think a lot of people, reading a book obviously gets you someplace. Listening to podcasts like this gets you someplace. But I've always said that masterminds, meetups are the thing that takes you from all the information and then puts it in play, because that is a great book. But I remember too, and I had been investing out of state my whole life, but I read it and I'm like, this really makes sense. But I can see exactly. You just need someone, you need the group of people to say like, well, this is actually how we did it. And then you go, oh, wait, they're just like me. They're just, they have a job, whatever it is, and they get it done. They have kids also. Like, we're all trying to figure this out. I think that's the thing that really helps people just take it to the next level.
Yeah. And having that accountability, I love being able to connect with people every week, every month to see what their journey is. You said you were going to contact this broker, this bank. Did you do it? So you have that accountability with the group too. And you want to, everybody has their own motives, but for me, I want to make sure I'm proving my point and I am doing my action steps, because I know people are going to ask if I did it. So, that's some of my intrinsic values and beliefs that I have, but it's been completely invaluable being with other people and continuing to talk and form those relationships on a frequent basis to push ourselves.
Yeah, I think it helps so much. You said before how you guys wanted to scale up and, get those 5 people who know more than you. But now, since you have so much experience, have you found that like it also helps to help people under? So there's like these groups have people who've done less than you guys, people who've done more than you. And then by teaching, going on podcasts, telling people what you've done, that also feels good. And that's what I found over the years. It's like, I always want to have this mastermind where, they're doing way more deals than me. but I really do get the value out of like, hey, I can help one or two people just get started like somebody did in the mastermind for you. Does it really feel good for both of you now to be able to help people, get in that first property just by giving them some advice in a mastermind?
Yeah, oh, it definitely does. I mean, since the bigger podcast, I've had so many people reach out to me, and I've been really trying to be cognizant of putting time on my calendar. I've talked to dozens and dozens of people since the podcast. And I said to my husband just last week, one of my favorite networking that I did on Zoom was actually a 20-year-old who he had bought his first duplex in high school, actually. And he's like, looking, how do I get to the next step? He was talking about creative financing and asking things. And like, this isn't somebody who has a ton of money that I'm going to be able to, bring into one of the syndication deals or anything, but it was one of my favorite people I spoke to last week because I really felt like I was giving positive motivation and, energy and advice to somebody who, my God, when I was 20, I was like partying in college. I didn't have a duplex. I didn't know anything about real estate investing. So I said to him, I'm like, my God, if I knew what you knew already and had mentors, like you're going to do amazing. Like he impressed me so much. So
yeah. Imagine if these things were taught like in high school and elementary school, they started talking about wealth building because I was fortunate enough. My dad was like obsessively teaching me everything from the time I was like a baby. Like I couldn't get away from it. I'm like, I just want to play video games.
For my kids now.
Yeah, you should be. Yeah, I've given my kids are 22 and 20 now, and they've gotten a fair share of it. But I'm like, now I know because at 20 I was like, okay, wait, this is cool. I really like this. And then my dad was like, well, go collect the rents. And I was like, this isn't that much fun. But I really, you want to give the idea of that to your kids. Like you guys have 3, I have 2. It's just because it's an alternative vehicle. So like my son's an actor, my daughter's, studying to be a dietitian. And like, I want them to know that you can do that, enjoy it, have a great career, but also have all this other stuff that you can be interested in, which for some is hobbies, but like real estate investing, like you've said the whole time, brings a nice return once you figure it out.
It does. And it frees you to do what you really want to in life too, so that, they can focus on acting or whatever they want to do. They don't have that pressure of needing to have a W-2 paycheck and, living paycheck to paycheck. If you have your passive income streams, that's phenomenal. You can truly follow what you want and you're passionate about in life.
Yeah. Yeah. Or like work a W-2 that you really like, that is less time. You know what I mean?
Yep.
Because all of us have been in, your hours are crazy. I know I have my cousin's a doctor and it's crazy. But like to work something that you're passionate about and then have this passion on the side is amazing. And I think having this passion on the side that then makes income allows you to readdress, like you said, well, I always wanted to do X. Maybe I can do X as a W-2, it makes less money, but now I'm making more money here. And then eventually you're at least free to make more decisions. It doesn't mean you have to, quit your job and do that because some people, it's good to have money. You got to build the snowball bigger along the way.
Yeah, that power of choice, even like my W-2 physician job. I mean, I still work a lot of hours, but I like what I do as a doctor. God forbid, worst case scenario, something happened or I quit or whatever. We have enough from the real estate, which our general expenses are covered. And that's a new thing, this year. And it's just so freeing to know that. So I really can focus on more the quality of work giving back, at the hospital now.
Yeah, but that's important. I think having that leverage makes you look at your job differently because it's less pressure. Yeah, this doesn't have to support the family, from either of you. It's like there's alternative ways of support here that are going. And that's why I think it is freeing. I mean, real estate, just the fact that you can add value to it and then it increases in value immediately makes it better than, stocks and crypto and all these things that exist like in the air, and I think that's what people are getting more and more attracted to. What's been the toughest part of the journey over the 5 years for you and Michael?
Not having the immediate return. I mean, in today's society, everybody wants the get rich quick scheme. Everybody, you see it on Instagram and Facebook feeds all the time. Like, oh, sign up for this. You can make so much money drop shipping on Amazon or whatever. Everybody wants like that big paycheck without putting in the work. And nothing about real estate is easy. Nothing has come overnight. I mean, our biggest paycheck from a single property with that 275% cash out refi. I mean, it took 18 months, right? So for 18 months, Michael was spending time at the property. We were injecting our own capital. To this day, Michael still has not, I mean, he does this full time. He's the real estate professional status.
Awesome.
he still hasn't taken a paycheck from our business. I mean, number one, we're blessed that my W-2, covers our expenses, but everything we have made from all these properties, we are immediately re-injecting into other projects. So Michael and I, we have the term ghost money. That's what we call it. We're like, this is ghost money where, 50% of my paycheck, we're investing. Anything that comes, all the cash flow from the properties, it's either going to CapEx or, rehabbing the apartments or injecting into another deal right now. So we call this ghost money. We're not realizing the returns of it right now. We're just snowballing this to build the portfolio up, and our big goal now is really generational wealth at this point.
Yeah. And I mean, that's a mindset shift also. I know in the form that you sent me, you said one of your favorite books was Compound Effect by Darren Hardy. That's it. Yeah. That's the snowball. It's like, okay, this snowball is going to keep getting bigger and bigger. I don't have to take it, but it's nice to know that it's growing bigger, and then you can use it because, you guys have acquired more and more units. And I think people think like, they're very doors heavy on social media. Like, how many doors do you have? All this. They don't realize like that means it comes with like CapEx, like you said. Yeah. So you have 25 units, 25 single families, then you have 25, furnaces, 25 hot water heaters, 25 roofs. So, the idea of multifamily, one roof, but then there's people again, you get a 4-family, it only has one giant furnace, and you're like, oh, great. We'll figure out how to bill it. And then it breaks and everyone wants to kill you. So
exactly. We've been there. We'll get PTSD right now.
It's a fun journey. So out of state, are you guys investing straight out yourself or with JV partners just in deals that they've already done? Like you said, they already have the boots on the ground.
Yeah, we have not done a single 100% just Michael and I deal out of state. It's all JV. We have an 8-unit in Indianapolis. It's 5 partners on that one. We have a 21-unit. It's a mixed short-term hostel, bar, restaurant place right on the lake outside of Chicago. It's beautiful. That's also a JV deal. And then we have the 17-unit. That was actually a JV deal too with local partners. It just happens to be right in front of my hospital's med school.
Oh, right.
Location. Yeah, really, really nice. And then the other ones besides the 22 single families, those are a mix of syndication deals where we're GP general partners on the deal, as well as every single deal where GP's on, we inject our own money from a limited partner position too, because ethically as well as tax vehicle, because we're getting the tax benefits with cost seg with it. So
I mean, I just feel like I've never been a big syndication person. Now I'm really looking into it because I want to leverage that time that I don't want to work. And I on the podcast, they made all these great syndicators. So I'm like, well, this is easy. But I really do think it's important for GPs to have the money in. I mean, I think that's the thing that you look at, like if things go wrong, who's going to feel it the most? You want them to feel it the most first.
Yeah. You want the skin in the game from the operators.
Absolutely. Going back a second to your husband got the real estate professional status. Yes. How did you learn about that? And then he's keeping his hours and obviously taking that. It's a huge advantage. I mean, it's a huge, but I don't know a lot of people who've actually done it.
Yeah. Yeah. So for us specifically, I mean, this is like the perfect setup. I have the high income W-2 physician job, and then he has the real estate professional status. So this is one of those loopholes in real estate where, you have to log your hours. You have to have at least 750 hours, which he's way above that with what he does with the real estate. But you have to log it. It can't be more than 50% more hours than your primary job. So like from a physician, you can't do that. I mean, you'd get audited I work a lot, so there's no way I could be like real estate professional status, saying, okay, I'm working more hours. Like, it's just not possible. So you have to log everything. And then this is one of those loopholes where when we have, the paper losses from all the properties and all the expenditures and everything like that, it's a paper loss that it can actually come off of my W-2 to lower my tax bracket now. We got tax refund, which is just amazing.
It is. It's ideally suited when you have one high earning spouse who loves their job and the other spouse or partner who could care less about their job and is able to just go and make sure that they're clocking the 750 hours.
Yeah, it's great for the flexibility too, because we have the 3 little kids at home, and my hours, it's a little bit more stable now that I'm in an administration role. I don't have to do like weekends and night shift anymore, which is awesome. But I mean, the flexibility there for my husband, pending like a water pipe breaks on Thanksgiving, like we can he can schedule around my work schedule too for our family, which is great.
Yeah. So where do you want to go from here? You've obviously scaled up pretty fast, with partners and these good relationships. So like, what's next on the radar for you guys?
Yeah, I've realized, and this is something that's kind of come organically over the last couple of years, and especially this past year, that I really do like speaking. I really do like teaching other people into this realm. And there's another girl that her husband actually is an emergency medicine physician as well. And she's full-time real estate, and we're forming a partnership for a coaching, which
Awesome.
we're going to start in January. So we haven't done that professionally by any means. It's all just been kind of, talking,
Yeah.
giving back time up until this point. And we're also publishing a couple books together right now too. So that's all
Yeah.
exciting. So it's a different area, more teaching, coaching, mentoring now from this side of it, which is exciting.
Yeah. Well, I always say like a podcast, I think, are a great way to see if people know what they're talking about. And I obviously, I got in touch with you right after I listened to the Bigger Pockets episode, and I was like, I really want to talk to you. But like, you just get a vibe for people on a podcast because they're long.
Yeah.
It's not
Yeah.
10-minute. It's not a 10-minute clip.
Exactly.
It's like,
It's
can
not
you
the
hold
clip
it
that you
together?
Yes, exactly. Yeah, that's true. That's true.
Can you keep it together and keep answering questions for an hour? And I think that really proves the knowledge part, because like we were talking a little bit before, like there's a lot of shiny stuff out there. So, to be able to figure it out, I always say like, just listen to someone on a podcast. So if you're listening to this, go back and listen to Lindsey's episode on Bigger Pockets. It's a great episode. And it's always, I think like, for me, obviously, I've been on that show twice and I talked to them, but like, you're always looking for other investors that you didn't know of before. And then you hear them, for me, I'm like, oh, I want to talk to you. But like, you're ideally set up for what you want to do. And I think it's like a fallacy that everyone needed to be in the game for, as long as I am, because I'm so old, like 30, 40 years in the game just to help people. It's not that.
Yeah.
It's about the journey and how much passion you have for the business and how much passion you have for, can I help somebody else? Just go from 0 to 1.
Yeah.
And then you check in 3 years later and then they're at like 7 and you're like, wow, like I helped that.
Yeah. Yeah, it's amazing. I say that to my husband all the time too. He said, you're talking to a lot of people for free. I'm like, yeah, but if I can, one of my quotes that I have, or I manifested, but it's on my vision board now, I want to be transformational to other people who are going to be transformational. So you never know what the one piece of advice you give somebody that they then teach their kids, like this advice and this mindset, it can end up being this generational thing that you're part of it, some small part of it. You never know. It's like the butterfly effect, right? So that's how I've been thinking of it.
No, but it's great. I mean, because just think about podcasts. For me, the way I think about it is like someone could listen to this episode and get one nugget. We'll never meet them. We'll never even know who they were. We'll know nothing about it, but will have had an impact. And for me, like that's it. Plus, I just like talking about real estate investing. It's so fun. One last question before we get to the end. How in the world do you even have the amount of time for this? You have 3 little kids, 6 and under. You work as an emergency.
That is the number one question.
I mean, like, what are you doing? I mean, I'm very, very organized, so I can get a lot done. I mean, do you guys have like these like systems that just work robotically? How are you getting all this done?
Yeah, I have a twin that looks just like, no, I'm just kidding. I wish I had a twin. If I could clone myself, that would be amazing. But no. So I think, I was just talking to my publisher earlier today and he said the same question. I swear to God, it's like the number one question I get. How do you do everything you do? Like, is this even real? Are you telling the truth? It's like, no, it is. I am like, anyone that knows me personally, like even my family, they're like, you're insane. Like, how are you doing all of this?
Yeah.
Number one, I think you make time for what's important. Like when people say, oh, I don't have time for that, I kind of call bullshit on that. Excuse my language a little bit, but I think
bullshit
you really
friendly here.
I think you make time for what's important. Like my Peloton, I'm big on exercising. I want my kids to know that I focus on health too. So like and if you look at my doc, just the ER doc is my my tag name on Peloton. Like you'll see, that's not bullshit. Like I do this 5 to 7 days a week. I focus on that. I focus on my kids. Like my quality time with my kids is very high. We're playing games when we're together. We do have an au pair that lives with us, which is financially friendly to have 3 kids instead of paying for like a babysitter or a nanny or something. Like, oh my God, we save so much money with her. But at the same time, she offloads some of this little stuff. Like she'll take the kids to school. She'll pick them up. To me, like, I don't like driving. I don't like being in traffic. So she's my who, not how in that. Like she takes care of that kind of stuff with the kids. Yeah, it's a great book. If who, not how. It's a great book to read. Dan Sullivan. But like she does that. My husband is very flexible with myself too. He knows when I get on my kicks, when I'm like, okay, like right now we're like working on publishing this book. Like I'm spending a couple hours a day. He's very good about giving me that time management. And even at work, like I can kind of schedule myself or my schedule around my work schedule, I should say. So my schedule changes. So sometimes I'm up at midnight, 1 a.m. and I'll be like shooting off emails. And people are like, probably, why is she up at this time? Well, that's when my kids are in bed. That's when I'm in my peak mental state. I'm getting stuff done. I know some people are like morning people waking up at 5 a.m. That's not me. I know I'm not the best early in the morning. So I have come to, there's a lot of books like The Miracle Morning. A lot of people say you should wake up at 6 a.m., get the stuff done. I have realized that is not my peak mental state. So
well, I always say you can do the savers whenever you get up for that book. It doesn't matter.
Yeah, exactly. So I do all of them. Like I do my journaling. I'm religious. I do that and my vision boards and everything like that. So I do a lot of the Miracle Morning steps, but it's just not in the morning.
Yeah,
it's more like at nighttime. So
yeah.
No. So to add the bottom line, to answer the question, you make time for what's important, and you have to have a good support system who will value. And I give back to when my husband needs more time and energy, then I'm picking up the slack too. So it's not a 50-50 all the time. Sometimes it's 90% him, 10% me, and then vice versa the next day. So
yeah. And how important it is to have that kind of like symbiotic relationship that you guys have, because I've always said like both parties really have to be like interested in real estate investing in a relationship. Mm-hmm. They don't always have to do it together, but like you can't have one party fighting the investing. That's just going to be a problem. How important is that for you guys to kind of know that you're always working on this together, and it's something you're bringing into your kids' lives as well?
I think it's so important. I mean, like you said, you don't have to have two couples that are doing the business together, but I feel bad because I do have people reach out to me saying, oh, my wife or my husband is so against that. They just want to put everything in the bank. They don't understand real estate, or even worse, they're putting everything on credit cards and they're living above their means. So it's really tough. It's a hard barrier. And I mean, thankfully, and part of the reason I married my husband, like we talked about these things before we got married, and what do we see our life goals, talking about kids and finances and everything like that. So we are on the same page. That is not to say we don't fight. My God, we fight like cats and dogs, but we have the right mindset to know that we are in this for the long haul. We do love each other, and one of us will say sorry at some point. So we get over it.
Yeah. And in the end, it's going to be fine because you have 3 kids to take care of. So whatever.
Yeah, exactly.
Yeah. Awesome. Lindsey, it's been a pleasure. Where is the best place for people to get in touch with you? One at cloverkeycapital.com, and then on Instagram where you are Doc Duguet, and that's DUGUET.
Correct. Yep. On Facebook, I'm the only Lindsey Duguet too. Instagram DM. I answer. I mean, you can ask anybody to reach out to me. I've answered everybody's like messages that they've sent me. So I like to be responsive.
Yeah, it is. It becomes overwhelming after BP ends, and then it's like, ooh, wow, there's a lot, and there is some garbage in there. But I really think like the one piece of advice that I've given to people who want to say they listen to you on this and they want to DM you and something, just come with a good question of something that you research. Don't just ask like, hey, how can I become an investor? Ask like a very direct question that you research, because that, like, for people like us, it really helps us answer the question better instead of going back and forth, a million times.
Yeah, I agree. Yeah, I've had great feedback. I really I've had a lot of people say, I listen to Bigger Pockets all the time. I've never actually reached out to anybody, but your story resonated. So it's nice. I mean, coming back to if you can help one person, I think it's a podcast well done.
Yeah, absolutely. Well, this definitely will. And I appreciate your time. It's good to finally meet you.
Thank you so much. Yeah, you as well.
All right. That was Lindsey Duguet. I'm Jonathan Green. We'll see you next episode. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green. And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to like, subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.